Hey dudes. Today, I am gonna teach you all about credit. So, what is credit? Well, credit is an agreement in which a borrower receives money to use with the promise of paying it back to a lender. Basically, credit is the ability to buy goods and services with money that you do not currently have. Understanding how credit works is extremely important, because much of our modern economy is based on credit, and responsibly using credit can make your life a lot easier. Being a good borrower with good history gives you financial stability. With that said, how does credit work? Well, several components go into credit, so let us go over them. There are four major components of how credit works, being principal, interest rates, and credit limits. Principal is the original amount of money that you agreed to pay back to the lender. Interest is the money you are charged for the privilege of using credit, assuming that you don't pay back your lender on time. Interest rates are the rate at which the money you owe your lender increases. For credit cards, this rate is often quite steep, so you don't want to fall behind. Finally, a credit limit is the maximum amount of credit that a lender will offer a borrower in a given time. As mentioned previously, credit is used in all sorts of applications in our lives. Some of these applications include credit cards, small plastic cards issued by banks allowing the holder to buy with credit; mortgages, loans used to purchase homes and other property; retail cards, credit cards issued by stores that can only be used at those same stores; auto loans, simple interest loans that allow you to buy an automobile; fuel card, a specific type of credit card that can be used to purchase gasoline and sometimes pay for repairs. You might be sitting there thinking, wow, this is cool, but how is any of this useful? Well, credit is useful because it gives you immediate access to money that you might not necessarily have. This allows you to make a purchase when you really need it and pay it back later. As for credit cards themselves, they come with a whole swath of benefits. Credit cards are much more secure than debit cards, making online shopping safer and protecting you from fraud. Many cards also offer cashback, meaning that you get money for spending money on certain things. Some of the best credit cards also offer automatic insurance on purchases, which is especially helpful when traveling. With all of this said, it is important to know that lenders don't just give out money to anybody. They look at your history to determine if you are a credible borrower. To do this, lenders use the credit score system. Credit scores range from 350 to 850, with scores over 700 being very good. Having a good credit score means you will be more likely to be accepted for loans and credit applications, so it is important to build a good score. Your score is based on your credit report, which compiles all of your borrowing habits and history. Some ways to build good credit include paying off all of your payments on time, successfully using multiple types of credit at once, and using smaller amounts of your available credit. Given this, it is important to keep up with the balance in your card. Credit balance refers to the money that you owe on the card. You can pay the minimum monthly balance in your card to have your balance rolled over to the next month, but this comes at a risk. When you allow your balance to build up or you miss payments entirely, you are subjected to the steep interest rates mentioned earlier. Neglecting credit card payments can cause interest to add up quickly, so stay on track. With credit cards also comes the risk of overspending, considering that you can spend money you don't have. To avoid this, only spend an amount of money that you know you can pay off at the end of the month. With other types of credit like car loans, you can have minimum monthly payments, or the smallest amount you can pay off, while still paying off said loan. However, paying less each time means that you pay more in the end, because you build interest over a longer time, so try to avoid this payment plan, if you can. Now that you know a little more about credit and how it works, go out there and succeed.